So a number of you have asked me to cover Near Protocol and the potential yield farming and investing opportunities on that chain. Today we're going to do just that using a new app on Near Protocol called Pembrock Finance and looking at how you can participate in not only yield farming on Near Protocol, but also leveraged yield farming for some really juicy rewards. So if you want to find out more about that, do stick around and watch till the end. Hello everyone and welcome back to the Baking Analyst channel. On this channel, we cover everything from cryptocurrencies to economics to personal finance with a focus on yield farming, decentralized finance, and how to invest your money. So if all that sounds interesting to you, do consider leaving a like and subscribing to this channel. With that being said, let's jump right into it. So the platform we'll be looking at today, which is a yield farm on Near blockchain, is Pembrock Finance. Now, Pembrock is a leveraged yield farming platform, the first of its type on Near Protocol, and there are several ways that you can earn a return on your investment. As you can see over here, the APYs do look really juicy, especially now during a bear market. 70% might not have seemed like much during the DGen DeFi summer days. However, it is a pretty high figure if you consider the current environment. And let's have a look at the coin pairs. These are blue chip coin pairs, so you're going to be exposed to USDT stablecoin, Bitcoin, as well as Near. So let's have a slightly deeper look at Pembrock Finance and how you can participate in one of these pools to earn returns. So with the concept of leverage yield farming, there are actually two ways you can earn yield on your assets in Pembrock. The first way is to do your usual yield farming. You supply one asset and another asset in a pair and then put them into a liquidity pool, earn the trading fees as well as yield farming rewards. And that is what you can see if you go over to the farm tab. So this is your usual yield farming interface. You can choose your leverage by adjusting the slider over here up or down. You can go all the way up to 3 times leverage based on your risk tolerance. And then as you can see, you can find the APRs that you'll be getting for each level of leverage. And as I change the slider, you can see the APRs start to change. Go ahead and choose a pool, connect your wallet, add liquidity, and then get started earning that yield.
So if you want to get started yield farming on Pembrock Finance, first of all, you will need to set up a Near wallet. As you can see on my screen over here, we do have the Near wallet already set up. You do need to deposit some Near tokens into your wallet in order to pay gas fees and have the wallet initialized. After that, you can just go ahead and connect your wallet right up here in Pembrock Finance, choose the Near wallet, and then you should get a prompt on connecting your wallet. Go ahead and connect your wallet and you should be able to now farm on Pembrock Finance. So let's have a look at how exactly you can open a yield farming position. Now, I do have some wrapped Near tokens in my wallet. If you don't know how to get some wrapped Near tokens, you can go over to the Ref Finance app to wrap your Near into WNear. So as you can see, I can go ahead and click on this wrap button and do that transaction. Now that I have some amount of wrapped Near in my wallet, I can go over to a desired farm of my choice and get started farming. So now let's go and select the wrapped Near tab and find some farm pools that involve that token. So I'm more interested in the USDT WNear farm. That is because the volatility of Near is somewhat tempered by the addition of USDT, providing some mode of hedging. So let's go ahead and click on farm over here. The next step that you can do is to choose which asset you would like to deposit. In this case, I'm depositing wrapped Near and borrowing USDT because I do not have this in my wallet. As you can see, I've got 0.5 Near available, and let's go ahead and enter the amount that we want to play with. So let's say we go ahead and put in 50% of our entire wallet balance and choose the maximum leverage of 3.0 times. That will give us a total APR of 33.52% APR. To confirm that transaction, now what we need to do is go ahead and click on farm and then approve that transaction in our wallet. Once that is done, you should be able to see your new position in Pembrock Finance. You can then go over to your portfolio tab on Pembrock Finance to see all the coins that you have farmed with and which pools they are in. So as you can see on this farm positions page, you can now see a new position at 67.3 APY, which is the position that we have just opened. So this is how you can track your assets on the portfolio page.
The second way you can earn yield using leverage finance platforms like Pembrock is using the lend function. Now, because leverage yield farming works by people borrowing some amount of capital on top of their own in order to yield farm for for high rewards, there are also fees to be gained for those people who are willing to lend to these yield farmers. And that can be accessed using the lending pools over here. As you can see, you can just deposit a single asset in this case, so not the same dual asset setup as in the farms. So you can just hold your ETH, hold your Bitcoin, hold your USN stablecoin, and essentially earn yield just for hodling rather than deal with anything to do with impermanent loss. So that is to say that if you were to stake your tokens on this platform, you're not going to be affected by the changes in relative value between the tokens in a particular liquidity pool.
Now, if you want to participate in the lending side of things, on the other hand, you can go ahead and click on lend. So let's have a look at Wrapped Near, for example, where you can earn 22.49% APY. So let's max out my deposit of Wrapped Near tokens and do the same thing as we saw earlier in the video. Once that goes through, we should now be able to see a new lending position pop up when we click on our portfolio page. And if we go over to lend pools, indeed, we do have a new position available over here.
So that is Pembrock Finance basic functions. That is what you can do to generate returns. Now, what about the actual token? Because a lot of you in the Discord especially, y'all are degens, you like to go ahead and go farm with some high risk tokens such as a governance token and get these really high APRs of 370%. Is this worth a play? Well, we will be looking into that using some tokenomics analysis, looking at their incentivization program as well as their staking program. So Pembrock has the PEM token as their main native token. You can then stake it in order to receive voting escrowed PEM, which is internet governance token. And when you stake these tokens to get VEPEM, then you're able to earn 118% APR on that token. So similar to many governance tokens or many native tokens out there. However, we also see that they are running this thing called the LP incentivization program, which is actually giving you a 20% bonus over a 6-month linear unlock. So they're giving you a slight premium to encourage you to swap your LP tokens to their native token. So if people take them up on this offer, of course, this could be supportive for the value of the PEM token. And then we have the tokenomics of the actual token. There are 160 million in maximum supply. And of course, this is going to start out being inflationary because yield farmers have to be rewarded, people who are lending out the capital have to be rewarded, and then there was the LP incentivization scheme. That all serves the purpose of attracting liquidity in order to generate some sort of network effect. We also see that the PEM holders or holders of this native token will be able to share any revenues of the protocol. So that includes fees collected from farmers when they harvest their yield farming rewards, as well as fees charged to lenders when they claim their borrowing profits. So all in all, you will be rewarded in some way or another through holding the PEM token. So that makes it different from tokens that have no other utility or value accrual and exist simply to be dumped on the market. So if you are into farming using native tokens, this could be one of the better plays for you. Finally, I wanted to talk about the risks associated with leveraged yield farming. Now, as we all know, in regular yield farming, there's already a whole host of risks, such as impermanent loss, as well as smart contract risk. In the case of leveraged yield farming, however, you are taking out a debt position. You are borrowing money in order to use that capital to yield farm for potentially higher returns than it costs you to borrow that money. So you are actually adding on 2 more risks to your overall strategy. The first is that of liquidation. If you borrow some coins and the collateral that you pledge in order to borrow that coin drops in value in relation to that borrowed coin, then your loan to value ratio goes down. When your loan to value ratio goes down to a level that is deemed unacceptable by the smart contract, it liquidates your entire position. You do incur a fee when you get liquidated. So that means that you will get back less than what you put in, therefore incurring a loss. And of course, this risk of liquidation increases as you increase your level of leverage, because as your leverage increases or as you borrow more, your debt grows, and therefore your debt position can only increase by a smaller percentage in relation to your collateral before the entire position gets liquidated. The other issue, of course, is that of interest rate losses, and that is where you have the issue of negative APY. That is when the cost of borrowing money becomes more than the returns that you can generate from that additional money. Now, that has happened on numerous occasions, especially when demand for borrowing is very high. Now, that means that you will have to monitor your position if you're leverage yield farming. You can't just leave it there and expect everything to just work itself out, because that is a real risk. You could wind up losing quite a bit if you have to pay out more APY than you're actually earning from farming. Now, in the last part of this video, we will be going on to do a bit of our own research, and that has to do with due diligence surrounding this project, how safe it is, whether it is likely to rug. And you'll be pleased to know that actually this Pembrock Finance project has been backed by some prominent investors, so their entire team is doxed in some way or form. You have Alameda Research backing this, you have Rev Finance, as well as Near backing this, Inc4 backing this. So they're pretty open about where they are, where they're from, who they're backed by, and what they do. So all good signs for a budding DeFi project. All in all, I hope this video has been informative and useful. If you liked it, do consider leaving a like and subscribing to this channel. If you want to see more such content, we come out with this kind of content on a regular basis, so do stay tuned. And with that being said, thanks for watching, and I will see you in the next one.